Good morning. My name is Carmen Lita Scott, President and CEO of the ATL Airport Chamber. Welcome to Friday Facts. Our media partners this morning are Focus Atlanta and His Gates Productions. Capital Analytics produces Focus Atlanta, which is the most comprehensive investor's guide on the Atlanta metro area. The 200-page report looks at all the major sectors and the investment opportunities in the market. After the webinar, I will send the link to this resource. In these days of telemarketing, and also as we're all working from home with teleworking, video has become a leading means of communication, such as we're doing today. His Gates Productions is offering video editing services to every business on this webinar that is connected to the ATL Airport Chamber. At the conclusion of the webinar, instructions to claim this offer will be sent to the audience. Today, Friday Facts will address the Coronavirus Aid, Relief, and Economic Security Act, also known as CARES. Our keynote speaker is Clark Jackson, Director, Southeastern Region, Congressional and Public Affairs Division of the U.S. Chamber. She serves as an advocate and lobbyist working with state and local chambers to support legislative affairs in Alabama, Florida, Georgia, Mississippi, North Carolina, South Carolina, and Tennessee. She is the regional lead for healthcare legislative priorities, as well as the U.S. Chamber's Center Enterprise Initiative, which focuses on bipartisanship and leadership from members of Congress. Ladies and gentlemen, it is my distinct honor to present Clark Jackson.
Okay. Hi. So thank you so much. Carmen Lita, for having me today. I'm more than happy to be here to present on the Federal CARES Act. I know that this is a time when small businesses are really struggling with the uncertainty of what's going on. And so I just wanted to be here today to be able to give you an update on what's going on with the Federal CARES Act. Things are changing every single day. So I have some of the latest information that we have at the U.S. Chamber to share with you. And then I'm going to do a PowerPoint presentation. And then when I'm finished with the PowerPoint, we'll go to a Q&A section. So first slide, just to give you an idea of the scale, this is a $2 trillion package. It's just under 10% of our regular GDP in our country. This package is designed to be robust because the idea is that this is the bridge that helps us avoid a prolonged recession and downturn, and allows that once regular commerce can begin to resume, we can go back to regular commerce. So in addition to the $2 trillion in face value of the package, because some of the funds can be used by the Federal Reserve, it can be leveraged to provide an additional $4 trillion in support of the economy. Now we'll talk a little bit about the individual provisions. Perhaps the most important, which is the automatic payments that the federal government is making to the individual taxpayer. Now, they'll begin the process of direct depositing these funds to taxpayers across the country. They've actually already begun the process of these direct deposits, but the amount is $1,200 per individual, $2,400 for joint returns, plus $500 per child. And it begins to phase out for incomes above $75,000 for individuals and $150,000 for joint income. So we're already seeing that there's, as of earlier this week, about 16 million initial unemployment claims have been filed. And so while us at the U.S. Chamber and the federal government and your local chambers are working hard on behalf of small businesses, we're going to see a rise in unemployment almost irrespective. And so this will include some fairly robust expansions of unemployment benefits. Most importantly, most of the restrictions on unemployment. So remember, if you go through unemployment, applying for assistance, there are all these qualifications about how long you've been employed, how long you'll have to wait, etc. So those eligibility requirements have been amended as it relates to the coronavirus. So in addition to the federal government is providing an additional $600 per week on top of the regular state benefit through July 31st. So states simply have to agree to accept this additional benefit on behalf of their residents. So a lot of questions have come up from employers about whether or not individuals will remain on unemployment, particularly given this enhanced benefit of $600 per week. So it's important to remember that eligibility ends when an individual can return to work. So if an employer is reopening and calling employees back, and that employee is available to work and they choose not to work, then their individual unemployment eligibility ends. So how do you access this? This still goes through your state unemployment office. So this is not something where you'll go to the federal government. You go to your state unemployment office. Okay, so we'll talk a little bit about the major provisions for employers. So we've really broken them down into three groups. The provisions that are available to all employers, the provisions that are available to larger employers, and then the small businesses, self-employed, independent contractors, and nonprofits, which is really where we'll spend the bulk of our time today. So the provisions that are available to all employers. The first is a payroll tax provision for employers who pay payroll taxes. So think about this. Everyone who's writing a check to their employees, after you write that check, you normally write another check to the federal government covering the payroll taxes for both the employee and the employer side. So under this bill, an employer may choose to delay their payment of the portion of the payroll taxes. So 6.2% of Social Security wages. You can delay paying that between now and January 1st, 2021. If you choose to delay that, you have to pay 50% of the accumulated amounts that you would have owed by December 31st, 2021, and then the remaining 50% on December 31st, 2022. Now, there's an important caveat here. This generally applies to all employers except if you've had a loan forgiven under the Paycheck Protection Program. This is the small business loan program we're going to talk about in a couple of minutes. So another tax change that's important is net operating losses, or NOLs. So if you have a business who has an operating loss and you would have been able to use that, you would have used that against prior taxes paid. Now operating losses are expanded from 2018, 2019, and 2020, and generally can be carried back 5 years. This also applies to pass-throughs and sole proprietors. So if your business also, this is primarily for corporations that have AMT credits, you can accelerate the recovery of those. And then you also have the opportunity to increase your interest deductibility for 2019 and 2020. And importantly, for restaurants and retail establishments who in the past couple of years may have made investments in their property, you can accelerate the recovery of that as well. So all of these provisions here, they're really centered around one idea, and that's improving liquidity for employers. So at the moment when employers have no revenue coming in, it's really hard to pay the bills. And so all of these provisions really give employers greater access to liquidity. It's not so much about reducing overall taxes as it is about the timing. So giving employers access to the cash that they have today to be able to pay their employees. Another provision that's available to all employers is the employee retention credit. Now, this was a late addition to the bill, so the earlier draft did not include this provision. So as a result, there really hasn't been as much attention paid to it as, say, like the Paycheck Protection Program, but the retention credit, it generally applies to all employers. Now we're talking about businesses, but also nonprofits, for example, who are fully or partially shut down as a result of the coronavirus, or they've had a 50% drop in their gross receipts in a quarter. And they're eligible for this until their gross receipts get back up to 80% of their prior year's amount. So think about this. This is designed to help employers who've shut down or have lost revenue, but who continue to pay their employees. So how much is this credit worth? This is a 50% of the wages paid by the employer, up to $10,000 per employee. And that's a fully refundable tax credit. So think about this as a $5,000 tax credit available to the employer. And the way this works is, in order to also improve liquidity and let you have the money that you already have now, the way the Treasury is handling this is they're allowing you to withhold this $5,000 credit. So when you go to file your 941 forms in the quarter, there'll be a place there where you can say that you're using the employee retention credit. Say you owed $8,000 per employee, you can reduce that by $5,000 per employee, and you can just pay $3,000. So this is not only a fully refundable tax credit, it's also an advanced tax credit, so you can keep the money that you have today. There are some special rules here for employers with more than 100 employees, and then those employers with less than 100 employees. So if you have more than 100 employees, the benefit only applies to employees who you're paying but are not providing services. So think about it this way. Your business is shut down. You've had this drop in revenue. Your employee is not working. They're not teleworking, but you continue to pay them. You can access this credit as a benefit in recognition of the fact that you paid them. If you have 100 or less employees, the requirement that they not be providing services doesn't apply. So it's available to all the employees you pay during the eligible period. So the eligible period, again, being when you're shut down or when you have this drop, this quarter with a drop in gross receipts relative to the prior year. So again, importantly here, the Paycheck Protection Program, that's that small business loan grant program we're about to talk about. If you receive one of those loans, because it can be converted into a grant, you can't take advantage of the employee retention credit too. So you need to decide whether or not the PPP program is best for you or this employee retention credit is best for you. But just know you can't do both. And again, here, we understand that employers may have cash flow problems. So if you're taking advantage of this credit, remember that you can withhold those funds and use them today to pay your employees. And then when you file that form to the federal government, you can withhold that $5,000 per employee. Okay, so next slide. We're going to talk about the mid and large size employers. So that's generally employers with more than 500 employees. Now the bill includes in total $500 billion to the Treasury Department in support of loans, loan guarantees, and Federal Reserve credit facilities. Now, a Federal Reserve credit facility, you may have read about these in the paper or heard about these. These are things that the Federal Reserve is creating, for example, to support commercial paper, money market funds. They do these as a regular course of business when we have a financial crisis. So they were used robustly in 2008, for example. 454 billion of that 500 billion is directly for businesses at large. There is $6 billion included in the bill in special programs for the airline industry and critical national security businesses that make up the remainder of that 454 to 500 billion. So we expect in the coming days, these Federal Credit Reserve facilities will be rolled out 100%. We've already started receiving guidance starting yesterday about how they'll work, and the Federal Reserve will start launching them, including all the terms and conditions that go along with these programs. So remember, this is not going to be a situation where a business most likely goes to the Treasury Department or the Federal Reserve. Instead, what the Federal Reserve is doing is supporting financial institutions in the U.S. in order for them to be able to make more loans available for these medium and large businesses. So there are some restrictions that go along with this. So in exchange for the benefit, that could include stock buybacks by the company, or some limits on increasing executive compensation. Okay, so this next slide is really where we're going to spend the bulk of our time today. So this is the small businesses, self-employed, independent contractors, and nonprofits. So the provision that's getting the most attention is called the Paycheck Protection Program. It's $349 billion in loans for small businesses. Now, that's generally defined as employers with less than 500 employees, 501c3s, the self-employed, sole proprietors, and independent contractors. A way of thinking about this is if your business is generally qualified for an SBA program, you're going to qualify under this program. And then in addition to that, some employers who would not qualify have been added to the list. And that includes, for example, independent contractors and the self-employed. This also includes restaurants and hotel folks who would otherwise be ineligible because if you add up all of their locations, they have more than 500 employees. But under this bill, it says we're going to judge you on a per location basis. So this is just for accommodation and food services, but you can be judged on a per location basis. So don't automatically assume because your business is not eligible for an SBA program that you're not eligible for the Paycheck Protection Program. So how much can you borrow? You can borrow up to 2.5 months of your average payroll expenses. Now, there's a formula to calculate average monthly payroll. And once that's calculated, you multiply that by 2.5. So the only exception here is that you can't exceed a loan of $10 million. Now, where do you get the loan? So you'll get these loans through your local community and the national lenders. And if a lender is already an SBA 7A lender, they were automatically qualified for the program. And then the Treasury every single day is adding more and more local and community banks who didn't already participate in the programs. They're adding them to the list. So we're starting to see a really generous offering of lenders to the PPP program. So I know Carmen Lita also has a list of your lenders in your area, and she's going to send that around after the call to make sure that you have a good list of who's available, who's providing these PPP loans in your area. So what I said was, they're going to be a generous amount of lenders. And the reason is because this is 100% federally backed by the government. So these loans have no risk to lenders. And then they get a generous portion of the loan percentage back for administering the loan. So we really are going to see a lot of lenders come on board. So if you're having an issue already with the PPP program, going to a lender and being told we've reached our cap, for example, or we're not taking any new loans. Please go to another bank. Don't give up there. There are so many banks out there that are available. And just be patient because know that this program is only a week old. And the bill passed Congress 2 weeks ago. And then within 2 weeks, we have final guidance. We have a brand new program, and we have banks across the country lending out $350 billion. So this is a Goliath effort on behalf of the federal government. And so there are glitches, but I just don't want to place blame necessarily. I think a lot of the national press has put blame on the lender side, but you have to think the borrower goes to the bank takes the loan, then they have to send the application to the SBA has to approve it, then they send it back to the lender, then the lender originates the loan. So it is a process. They're working through any glitches, and so I encourage you to be patient. If you've already shown up to a lender and been either turned away or you haven't heard back, just be patient. So there are minimal requirements as far as underwriting these loans. There's no requirement for collateral. No personal guarantee is required. And a really unique feature of these loans is that they can convert into grants based off of what the borrower spends the money on. So a way of the way the bill is laid out is it looks at the 8 weeks of your expenses after the origination of the loan. And then you get to tally up everything you spent on payroll, everything you spent on rent for your business, interest on the mortgages tied to your business, and what you spent on the utilities for your business. And you can get dollar for dollar forgiveness up to the amount of your loan. So you cannot get forgiveness that exceeds the amount of your loan. But the once they release guidance, they did have a caveat here, and that's that 75% of your loan has to be spent on payroll. So the max amount that you can spend on rent, utilities, interest on your mortgage can't exceed 25% of your loan. So be careful when you're looking at your expenses to make sure that 75% of your loan is spent on payroll. Because there's some other conditions. Your loan forgiveness is reduced proportionately if you reduce the number of employees that you had relative to a benchmark period. So either the 12 previous months prior to the origination of your loan, or if you weren't in operation in 2019, then you can use January 1st, 2020 through February 29th, 2020. The loan forgiveness is also reduced if you reduce the wages or the hours of your employees more than 25%. Any of your employees that are making less than $100,000. So that's another good note about wages above 100,000. So in your calculation of payroll expenses, you can count the first $100,000 that you paid an employee, but nothing beyond that. So this is really targeted towards our middle income earners. And that $100,000 doesn't include your benefits. So this is just your cash payroll that you pay them. You can include up to $100,000 of what you paid an employee. Employees can also avoid a reduction, and we've seen this happen. Employers have already had to lay people off due to the coronavirus, or they've reduced hours of their employees. So in order for you to be forgiven of your loan, what you need to do is bring back those employees or restore their wages by June 30th of this year. So think about it this way. You've laid off an employee to reduce wages in order to help you get through this really difficult time. If you made those reductions between February 15th and April 26th, you need to restore those employees and or bring them back up to their wages by June 30th to be forgiven as a grant. So your loan can be forgiven as a grant. Additionally, after April 26th, you cannot make any changes to your employees or your wages until after June 30th in order to be forgiven. However, if you laid off an employee or reduced someone's hours or wages prior to April 15th, you don't have to restore their wages in order to qualify for forgiveness. So it's really just that period of time between February 15th and April 26th. So anybody you laid off, then you have to bring them back up to your wages and your amount of FTEs from the prior 12 years. So again, here, what the government is incentivizing is it really just wants to give money through small businesses, money for them to keep paying their employees. We often get asked, what if my business is shut down completely? Or what if I live in an area where the governor has said, only essential businesses can open? So that does not matter for the purposes of the Paycheck Protection Program. So what this loan looks at is after taking out the loan, were you paying your employees? So remember, the goal here of creating this program was to provide assistance essentially in the form of a grant to small businesses to keep paying their employees, keep them off of the unemployment rolls, keep them paid with their benefits. So if you provide health insurance, for example, or, you know, retirement benefits, for example, you know, those are all real benefits that they can access because you keep them on the payrolls. Not to mention, if the federal government opens back up, let's just say tomorrow, if you already have these folks on your payroll and you're paying them, you can call them back tomorrow and you can start your business right back up where it left off. If you've had to furlough or lay off these employees, you know, it's really hard to get them back. They may have taken another job, or you can't get them back on for 2 or 3 days. So the idea of this program is to make sure that we have a seamless transition back into the regular commerce by keeping employees paid by the employer. Okay, so the next slide. You can learn more about this program at uschamber.com/SB loans. So the U.S. Chamber released this guide, and it really does. It walks you through every step of the process. So this SB loan, www.uschamber.com/SB loans, it really walks you through every step of the program. And it asks you, you know, who's eligible for this program and what your forgiveness might look like on the back end, how you calculate average monthly payroll, what your lender is looking for when you show up to apply for this loan. So I really, really encourage you to look at that guide, and I'm going to make sure that Carmen Lita has that information so she can send it out to you so you can use that guide when you go to your lender to apply for the Paycheck Protection Program. Okay, so we're going to talk about another provision. This is also benefits small businesses, the self-employed, independent contractors, and nonprofits. And this is the SBA Economic Injury Disaster Loans, also known as EIDL loans. So EIDL loans have been around a long time. If you happen to have been affected by a hurricane or a tornado, for example, you might have applied for and received an EIDL loan. Now, who's eligible? Small businesses and nonprofits, including faith-based. So there's no restrictions here on any types of nonprofit, chambers of commerce, 501c6s. It's any entity or nonprofit that has fewer than 500 employees. And again here, sole proprietors and independent contractors. So this is an actual loan. This is not a loan that in general converts to a grant. And we just saw today that the SBA has sort of released new guidance that you can only borrow up to $35,000 in working capital. It was initially, when the bill passed, it provided up to $2 million in working capital. But because so many businesses have applied for this, they've reached their cap. And they've reduced that from 2 million to 35,000. Now I realize that's an extremely drastic change. However, they're running out of money really quickly. So in order to make sure that most small businesses are able to still access this program, they've reduced the cap. So it's possible that Congress could extend it and provide more money, but in the meantime, they've reduced it to $35,000 max loan here. So this is a loan. Again, it can be repaid over 30 years. You'll see the interest rate on the screen there. If you take out this loan, payments are deferred for up to a year, so you don't have to immediately start repaying this loan. They made it easier for individual businesses to apply, so your loan is going to be based on your credit score. You don't have to immediately produce tax returns. There's no personal guarantee. No collateral is required for $25,000 or less. Beyond that, there's just general security interest, or sometimes it's secured with real estate, but they really are trying to move away from real estate in this particular instance. So an important feature that's brand new as a part of the result of the CARES Act is if you're applying for this EIDL loan, one of these injury disaster loans, you can request that you be provided an emergency grant, which they are supposed to provide within 3 days. Usually that's 3 days of when you hear back from the SBA, acknowledging the loan and giving you a loan number. but you can request up to $10,000. It's not always going to be 10,000, but it can be up to 10,000. And the bill details what you may use the grant for, but it does not have any requirements. So you should think about this as a $10,000 grant that does not need to be repaid, not even if you're denied the loan. So you apply for the loan, you request this emergency grant, you receive it, and then you're denied the EIDL loan. You still don't have to pay back that $10,000. So you should think about this as an emergency grant. There are some important interactions with the Paycheck Protection Program we just talked about. So importantly, for example, if you end up with both, and the reason why you might end up with both would be you've already applied and received an EIDL loan, and now that the Paycheck Protection Program is out, you're wanting to apply for those. You just need to know that this $10,000 grant from the EIDL loan will roll into your Paycheck Protection Program's forgiveness. So you can't be forgiven twice. So this $10,000 from the EIDL loan will be rolled into your PPP loan and be forgiven under the PPP. What you'll need to do is when you go in to apply for your PPP, you need to tell your lender that you've already received an EIDL loan and you've already received this $10,000 grant, and they'll help you roll that into your PPP. There's also some requirements with respect to the Paycheck Protection Program that you can't double dip. So in other words, you can't take out two loans, pay PPP and an EIDL loan, and pay the same bills with two loans. So the Paycheck Protection Program really only pays for four things. That's payroll, that's utilities, that's interest on your mortgages tied to the business, and rent payments for your business. So those are the only four things that you can use your Paycheck Protection Program loan for in order to be forgiven. So if you have an EIDL loan in addition to that, you need to log on to the SBA's website and go under EIDL loans and figure out what you can use EIDL loans for that is not rent, utilities, interest on your mortgage, and payroll. So you can't use funds from an EIDL to pay for the same things as the funds from the Paycheck Protection Program. So if you're in a situation where you have both, which is totally fine, you can apply for and receive both programs. You just can't double dip into both programs. So you have to make sure that your EIDL loan is being used for something other than the Paycheck Protection loan. Okay, so what they've done in this CARES Act was they made the Paycheck Protection Program the most favorable program. And then what they did was that they tacked on these other programs like EIDL that don't avail themselves necessarily to the Paycheck Protection Program. And so the most favorable program in all of the CARES Act is this Paycheck Protection Program. And another thing about the PPP versus the EIDL is an EIDL loan has 3.75% interest rates. However, it can be repaid over 30 years. The Paycheck Protection Program is only a 1% interest rate. However, it has to be paid back in 2 years. So you need to be looking at both programs, see what makes the most sense for your business before you apply for either. So the next slide is with respect to small businesses, there were some provisions that were included in the CARES Act that don't come, from the CARES Act. They come from the Families First Act, which was the prior bill. So this is just a quick overview of what was included. This has already gone into effect, so you may know about this already, but I just wanted to cover it quickly. There was a requirement included that employers with less than 500 employees provide paid sick leave. So 10 days of paid sick leave to their employees if it relates to the coronavirus. So sick leave is taken when you're ill, when you're quarantined, or when you need to take care of a family member who is quarantined, or if you're taking care of a child because of a school or daycare closure. Now, leave is paid at your regular rate, but it's for a maximum of $511 per day unless you're taking care of a family member. And in that case, is paid at 2/3 the regular rate, maximum of $200 per day. Importantly here, the federal government will reimburse you 100% of these costs up to the daily maximum. This is a refundable tax credit, and understanding that businesses have liquidity problems, the Treasury Department is taking steps to allow businesses to request in advance of the refundable credit. So you have the resources to pay those who are taking sick leave now. Now, this is in addition to what your employer already provides, including what's required by your state and local laws. Now, there's been some talk about employers with 50 or less employees being exempt. The law does provide for an exemption, but you can only be exempt when it's tied to a leave taken for caring for a child with school or daycare closure, and only to the extent that providing this leave will threaten the viability of your business. And you have to prove that to the Department of Labor. So if you're considering it, check out the Department of Labor's guidelines that they have posted on their website to see if you possibly could be exempt from the program. And then finally, paid sick leave is generally not available to employees where they can telework. So know that this is only for an employee that is taking care of a child, and they can't stagger their hours or change their hours in order to telework. Okay, this next slide is about Family Medical Leave Act. The bill included paid family leave as well as paid sick leave. The law includes for employers with less than 500 employees, they're required to pay up to 10 weeks of paid family leave if the employee needs to take care of a child due to a school or childcare closure caused by the coronavirus. So that's the only reason for this extended family leave. When you think about the interaction between this and the sick leave, the employee would take the 10 days of sick leave first, then they would be eligible for an additional 10 weeks of paid leave. Now here, the leave is paid at 2/3 of the regular rate, a maximum of $200 per day. It is in addition to what you already provide under state and local law, and again, is fully reimbursed in the same way as the sick leave. And there are some similar exemptions for employers with less than 50 employees. And same as the paid sick leave, it doesn't apply to an employee who can telework. And so the next slide just covers the U.S. Chamber's website. Again, uschamber.com. Our homepage has been converted into our coronavirus page. It includes all kinds of resources. That one pager about the Paycheck Protection Program. There's a one pager on the Employee Retention Credit. There's one pagers on that Family Medical Leave Act. There's one pagers on idle loans. So please go to www.uschamber.com and check out all the resources that we have for you. It really does lay out all of these programs so you can make sure that you're making the right decision for your business. Okay, so Carmelita, I'm ready to take some questions from you if you have any for me.
Actually, I do, Clark. Thank you so much for all of that valuable information. And many of our questions you actually addressed, but one of our callers wants to know, in the PPP loan, in the payment interest portion, does it include the company truck, Home Depot credit card? And in regard to buying equipment, do you know how this person can find out how to calculate that?
So I'll answer their question first, and the answer is no. So you can only use a PPP loan for payroll for your employees or yourself if you're an independent contractor, sole proprietor. So payroll, rent on your business, so your building, mortgages that are tied to your building, to your business, and utilities. So you can use an idle loan to pay for some of your capital investments and for any of the other working capital that you need to keep your business open during this time. You can apply for an idle loan to pay for those things. And then to answer your question about the part where you would calculate this, I'm going to send you to www.uschamber.com/SB loans, and it walks you through the process of the calculations, what's included in payroll, what's excluded from payroll, those dates that you need to use in order to calculate payroll. So everything you need to do to know exactly what you're going to ask the lender for when you walk through the front doors of the bank, and that if you go through this guide, you'll be fully prepared to get your loan.
So our next caller would like to know, how can you include 1099 contractors as employees if you have contracted them for more than 12 months?
Okay, so no, you cannot include your contract employees on your payroll. The reason being that contract employees are eligible for the Paycheck Protection Program. So if you have contract employees, contact them, let them know that they're eligible to apply for a PPP program, but you cannot include those in your calculation of payroll.
Can you use the PPP loan to pay for healthcare payments?
So again, that 4-step guide will tell you exactly what you can include in payroll, what is excluded from payroll. But to answer your question, you can pay for your benefits to your employees with the PPP loan and be forgiven of those costs. Yes.
Okay, Clark, did we hear you correctly that the idle loan, it's changed to 35,000? Because we are in the we all think that it was 2 million.
So yes, unfortunately, when the law passed, it included up to $2 million in working capital. However, because this program has been so popular and the funds have already been exhausted, they're capping out all new loans at $35,000 is what we're hearing. So this is very much so developing. We got this guidance last night. And then again this morning, there was a New York Times article that was saying that they're definitely moving it to $35,000. Some members of Congress are even saying 25,000. So this is a moving target. But as of now, what I would say is, when you go through the EIDL process, I would ask for the max amount that you need. I would apply for whatever you need. And then when SBA gets back in touch with you to approve your loan, then they may say, I'm sorry, we're not going to be able to give you more than 35. But I wouldn't go through the process and just ask for 35. I would apply for what you need and let them tell you that they can't accept more.
That's really good advice, Clark. You know, there are many people, they have questions about PPP and idle loans and what should happen if they've already applied for them. So if you've already applied but not committed, are you still eligible for a higher amount than originally estimated or established?
So are we talking about an idle loan here?
The question asks for both, so would it
Okay,
apply to either?
well, so if you've already applied for a PPP program and you're in a situation where you haven't heard back from your bank, the way that the law was written was you would show up at your lender and you would request a certain amount, and then you would make a good faith certification that you need the money, that you don't have other pending loans, and that you haven't already received a loan from someone else. So if you've already applied for a loan at the bank and you just haven't heard back, my advice to you would be to just remember that there is that good faith certification, that you're not supposed to have other pending loans. However, I will say, I know of a lot of businesses who have applied at several banks and are just waiting to hear back who gets back to them first. But I can't advise you to do that because remember, when you sign that contract with the bank, you have a good faith certification that you don't have other pending loans. So I think that's important to know. So if you've already applied, I think you wait and you stick with what you've already applied for. When it comes to the EIDL program, this is totally different. So PPP program is with your local bank or with your national bank. EIDL loan is through the SBA, so the Small Business Administration, totally separate programs. What they're saying is, I know a lot of people have had a backlog and not heard back from the SBA. They had a lot of glitches with their system. They had a security breach. So if you applied prior to March 30th of this year and you haven't heard back, you can go back on and reapply. Now, if you've applied in the last week or so and haven't heard back from the SBA yet, just be patient. They're working through so many loans. They're working as quickly as they can to get back to everyone. But I would not go back on and ask for more money.
You know, there's an airlines and an airport package that should be coming out. Do you know if that package has any information that will permit the airport small business community to be eligible? We have many members of our chamber that actually are companies in the airport to include concessions and construction
Of
companies.
course. So there was the $6 billion included in the CARES Act for the airline industry and critical national security industry. And that includes suppliers of the airline industry. And I know there's a lot in your area. So we're waiting for the official guidance to come out on on that special program. And I will get that to you when I hear more guidance. But yes, your businesses in that area that support the airline industry should qualify.
Thank you. Thank you so much. What about tax data? What tax data should someone use when applying if they are a new business? For example, this business started in 2019, but they've not yet filed their 2019 income tax. So they were not in business in 2018.
Is this for the PPP program or the individual credits from the federal government on tax? They're making individual payments to the taxpayers. Is it specific to a certain
It's not
program?
specific to a specific program. Does the question apply to either program?
So I think maybe they're talking about the PPP program. And what you'll do when you look for the PPP program is you'll look at your payroll from 2019. And it's okay if you haven't filed your taxes. You know, the IRS extended the taxes for 2019 until July 15th of this year. So you're okay there. You wouldn't have had to file your taxes in order to be eligible for the PPP program. What you're going to need to show up with is your payroll documentation that you were paying employees in 2019. I think if that question was about the PPP, that should answer it. If it's about the employee retention credit or another one of the tax credits, and they want to use them against, say, prior taxes paid or interest deductibility, you'll want to maybe I'm not sure about that. So you may want to talk to your accountant about how that would work.
Do you, Clark, have any information on the unemployment benefits? For example, if an employee applied for the benefits and they've not heard anything yet, where they might go for additional assistance?
You know, I have not heard that there's been a lag in unemployment benefits, but again, unemployment benefits are done at the state level. So it's an individual program and it's a 50-state patchwork quilt of different programs. So I would say contact your state unemployment office. And if there's an issue and you are an employee, you can ask your employer to file for you. I've heard that really alleviates some of the lag time if an employer files for the employee as opposed to the employee going to the unemployment office.
And then I just have one last question, and it is my 1099 is based upon sales. So what happens if I do not match the sales I put in the PPP for those 8 weeks, or going further, I do not have a good year?
Um, I'm not 100% clear on the question, but the way I'm going to answer it is the PPP program is only meant for payroll and your business expenses on rent, utilities, and interest on your mortgage. So it won't pay it. And if you have to take a salary in order to get the Paycheck Protection Program. Now there is additional guidance on independent contractors, sole proprietors, S corps, C corps, available. That's coming out, I believe, today from the federal government to give you a little bit more clarity about how you calculate what's included for you, because you're treated a little differently than a small business who has a payroll. So look for the guidance to come out of the federal government on individual contractors, independent contractors, sole proprietors, self-employed. And I would just encourage you to talk to your lender as well about your specific situation.
Clark, thank you so very much for sharing this valuable information with our website. Let's give Clark a round of applause. And our next webinar is Wednesday, April the 15th. The subject matter will be cybersecurity and protecting your business during this time of uncertainty. Our keynote speaker will be Paul Myers from Right Path Technology. Also, on April the 24th, for Friday Facts, we will have a speaker that will assist you in filling out your applications for the loan processes. So in the meantime, we look forward to seeing you then. Take care, be safe, and enjoy your weekend. Bye-bye.